You've probably seen it. Markets are red, XRP is bleeding again, and everyone's saying the same thing. Just hold, it'll come back. But here's the question no one wants to answer. What if this isn't just another dip? What if this crash is the test, the moment that separates XRP's believers from its survivors? Because while retail panics, institutions are preparing. And if you don't position yourself right now, you might survive the storm, but you'll miss the wave that comes after it. Before you make any move, you need to understand why this crash is happening and what it actually means for XRP. This isn't 2018. It's not about hype dying. This is about liquidity rotation and ETF-driven repricing. When Solana ETFs launched, they drained billions in capital from retail altcoins and funneled it into structured, compliant vehicles. That's not dumping, that's migration. Money is moving where Wall Street feels safe to play. Now, XRP's turn is next. Two XRP ETFs, Bitwise and Canary Capital, have already filed to go live this November. And history shows, when ETFs launch, volatility spikes before stabilization. Bitcoin and Ethereum both crashed 20-30% right before their ETF approvals, and then doubled within months. So what you're seeing now isn't collapse, it's compression. Smart money is forcing weak hands out, so liquidity can enter cleanly once ETFs open the door. So what should you do if you already hold XRP? Let's go through it step by step. 1. Stop watching price, start tracking position. If you bought XRP around 0.70 or even near 1, your instinct right now might be to panic. The charts look flat, headlines scream no movement, and price has been stuck hovering between $2 and $2.50 for weeks. The difference between panic sellers and future winners is patience during these boring stretches, because in crypto, the ones who check prices every hour lose discipline. The ones who track positioning and wait for the system to catch up win the cycle. 2. Use market crashes for dollar cost averaging. When fear dominates, accumulation begins. Use dollar cost averaging, DCA, small scheduled buys every week or month instead of trying to call the bottom. Example, if you buy $100 of XRP every week for 10 weeks during a crash, you'll likely beat 90% of traders who go all in at random. The key isn't price, it's consistency. You're not buying the dip, you're buying time in the system. 3. Track institutional timelines, not headlines. Ignore Twitter panic. Follow filings. Canary Capital's XRP ETF countdown started October 24th. Bitwise followed October 31st. That means the first XRP ETF goes live around November 13th to 14th, and the second around November 19th to 20th. ETF liquidity doesn't hit all at once. It phases in as custodians settle orders and authorized participants start trading. That means you'll likely see volatility in November, then gradual absorption in December and Q1 2026. So instead of guessing tops and bottoms, plan your DCA window between now and mid-December. 4. Don't chase XRP ETF name yet. Here's the question most retail holders are asking. Should I buy XRP ETFs instead of XRP itself? Let's be clear. Retail investors cannot yet buy XRP spot ETFs until they're approved and listed. When they go live, they'll be accessible through major brokers like Fidelity, Charles Schwab, and BlackRock's iShares platform, but not immediately for everyone worldwide. And remember, ETFs don't give you custody of your XRP, they give you exposure to its price. If your goal is to participate in the liquidity migration, buying XRP directly gives you both utility and future airdrop/DeFi access that ETFs won't. So right now, hold XRP. Don't chase ETFs. Let institutions use ETFs to buy from you later, not the other way around. 5. Prepare for the institutional liquidity wave. Institutions don't move until rules are written. Once the SEC finalizes its new framework for altcoin ETFs, expected around late November, banks and hedge funds will enter with custody-grade systems. What does that mean for you? It means XRP's liquidity profile will shift from speculative to infrastructural. Prices will rise slower, but more sustainably. When this happens, your exit strategy should mirror institutional flow, staggered selling instead of emotional exits. For example, sell 10% when XRP hits $2, another 10% at $5, and continue laddering upwards. That's how you profit strategically while keeping exposure to long-term upside. Here's what not to do. Don't over-leverage. XRP isn't designed for 100 times leverage trading. Its real gains come from macro shifts, not intraday volatility. Leverage turns you from an investor into a liquidation waiting to happen. Don't sell the bottom. The market wants you to sell now. That's how liquidity transfers from retail to institutional hands. If your conviction hasn't changed, your strategy shouldn't either. Don't go all in on one narrative. Even if XRP dominates cross-border payments, diversify. Hold some BTC or ETH for liquidity hedging. Think like a portfolio, not a tribe. Before we continue, a quick word about Unic, a platform that's quietly changing how crypto OTC markets work. Unic has already processed over $1.3 billion in trading volume, serving more than 5.5 million active users. They're the first decentralized OTC hub to combine pre-market access with full transparency. No hidden spreads, no intermediaries. Think of it as the fair trade version of OTC, not financial advice. Always your link is in the description. Now back to XRP. Here's what institutions do when markets crash, and what you can learn from them. They don't buy the bottom, they build into the bottom. That means they don't throw everything in at once. They scale in, following structure and patience. Let's be blunt, Wall Street doesn't chase green candles. They accumulate red ones. XRP's fundamentals haven't changed. If anything, they've strengthened. Ripple now operates in over 70 countries, holds key payment licenses in Singapore and the UK, and is expanding corridors with major banks in Japan, Dubai, and Brazil. Meanwhile, XRP supply dynamics are tightening. Ripple's escrow release schedule has become predictable. Burn mechanisms from on-chain activity are slowly compounding. And if ETFs lock up even 5% of circulating supply for institutional custody, retail float shrinks dramatically. That's how price stops being suppressed, not overnight, but through liquidity absorption. When big players can't source XRP cheaply anymore, the bids rise automatically. Let's talk about how insiders are moving right now. While social media is panicking, OTC desks are quietly processing multi-million XRP transfers from private wallets into institutional custody. That's the setup phase for ETFs, the phase where real ownership moves off exchange and into controlled vaults. Meanwhile, large wallets have started accumulating again below 0.50, the same pattern we saw before the 2021 rally. Ripple itself continues to expand partnerships, not retreat. Japan, SBI Holdings integrating RippleNet for remittance. UAE, Tranglo corridor expansion for instant settlement. LATAM, Ripple's partnership with PeerSys Technology for blockchain infrastructure. That's not the behavior of a company expecting to lose. It's the posture of one preparing to scale. Summarize your action plan. 1. Hold your core XRP. Never sell your foundation during fear cycles. 2. DCA during red months. Let volatility work for you, not against you. 3. Track ETF timelines and SEC updates. These are catalysts, not rumors. 4. Ignore short-term noise. You're not trading, you're positioning for liquidity migration. 5. Plan exits logically. Ladder sell, don't panic sell. The real money moves quietly. 6. Educate yourself. Understand custody rules, ETF mechanics, and taxation early, before mainstream adoption floods in. Before the big money comes, there's always an early infrastructure layer, and Unic is one of those. Their UN token IDO is live now, with 25% NFT holder discounts and 11% affiliate rewards. They're positioning themselves as the on-chain OTC bridge for institutional liquidity, exactly the kind of project that benefits when XRP ETFs go live. Not financial advice, but worth a look. Link in description below. Crashes create two kinds of investors, the ones who panic and the ones who position. The first wait for approval, the second prepare for inevitability. If you hold XRP today, your decision isn't whether to believe, it's whether to act like someone who understands what's coming. Because once suppression ends, it won't announce itself. It'll already be too late to buy. Stay steady, stay rational, and stay early. This is Wealthy Wise. Subscribe. Share this with someone who needs clarity in the chaos. And remember, volatility shakes hands, but patience signs contracts.